welcome Rashaun, a good friend of mine, to Love, Art, and War. As you know, I've been just kind of unpacking my own journey with investing, just as an athlete who's in transition. I've talked a lot about you and just how you've helped in that, how you've given me perspective on how to handle my business and become a CEO of my own seat. But especially in that transition from active player to retired, who's trying to build legacy, who's trying to build infrastructure, or just how to wrap my mind around some of that. So definitely wanted to bring you on and drop some jewels, to everybody who's been following along. I'll let you kind of introduce yourself if they hadn't already seen already. You're on Shark Tank, you're doing everything else, but I'll let you kind of run your deal.
Well, first of all, thanks for having me, man. I'm super excited to be here. I'm a huge fan of yours, and what's cool about this is the folks out there that don't know how you and our relationship has evolved. These are normal conversations for us. So this isn't like some one-time thing where we have to sit and plot and plan and strategize. You and I talk like this whenever we talk. So this is a great way to just kind of connect and share a lot of the conversations that we have. So my story is very similar to a lot of the athletes that I work with. I'm from the south side of Chicago. I beat out 99.9% of people who I competed with, but I went the finance route instead of the athletic route. And I started my career on Wall Street. I was an investment banker at Goldman Sachs, Wachovia, and Deutsche Bank. In fact, the only black dudes in the clubs in the early 2000s were either NFL, NBA players, or black Wall Street dudes. This is back when was a crazy thing. So,
right.
I feel like I've been circling the athlete and entertainer community just because we were all in our early 20s making a bunch of money. And we all lived in the same neighborhoods, drove the same cars, and some of us dated the same women. But now my world is minority owner of the Atlanta Falcons. I'm a venture capitalist. My family office, we acquire businesses, we invest in tech startups, guest shark on Shark Tank, like you mentioned, and I mentor over 100 athletes and entertainers. So I've been doing that for 25 years.
What made you start working with athletes and entertainers? Because that's the intersection that I ran into you. I was looking at trying to study who's making money, who can I learn from, and we quickly found you. Be interested to know why you intentionally kind of aligned yourself with athletes and entertainers.
It's actually the smallest group of people I work with. So when I was in college, I started this nonprofit called the Kemet Institute. Kemet means Land of Blacks. Yep. And it was my goal to take everything that I learned from Wall Street and give it back to my community. In fact, I chose Goldman Sachs as the place to work for because they allowed me to work in Chicago. I didn't have to go to New York to Wall Street. So I didn't go to Morgan Stanley and the other firms. So I've been teaching financial literacy to kids on the south side of Chicago, Slauson and Crenshaw, in LA, all across the country. And adults, 401k, a lot of people just call me, man, what should I put in my 401k? I don't understand. It's not growing. So I work with a lot of single moms. I work with a lot of working professionals. And then wealthy people who are retired, who are just sitting in stocks and bonds and want to buy a business or want to do real estate. So these are all the groups that I've been working with since 2001. Now, funny story, how athletes became a little more prominent. Two things happened around the same time. The first thing was, imagine me showing up on Slauson and Crenshaw in my red Aston Martin with my custom suit on. I got a briefcase. Right. I come there teaching these kids about private equity and venture capital. View Park Middle School was the school that I was at. 7th graders, 8th graders. And I give them 2 hours of some of the best financial literacy you'll ever get. In fact, because I'm from the hood, I would come there with a briefcase full of cash. And the first thing out of my mouth, if you can tell me what a stock is, I'll give you $5,000. If you tell me what a bond is, I'll give you $10,000. And while I never gave any money away doing that for 20 years, for the next 2 hours, there was not a group of 7th and 8th graders in America that wanted to know more about stocks and bonds than these kids.
Right. Yeah.
So I would do stuff like that and try to reach them on where they were in Maslow's hierarchy of needs. I'm trying to get to them right where they are. Not talking to them about dividends and stuff on the first day. Let's just talk about money, because that's what we all need. That's what we all want. I remember being there myself. Do you know at the end of every single one of those classes, when I said, all right, guys, now what do you want to be when you grow up? You want to be a private equity guy? You want to be an investment banker like me? What do you think they said, Malcolm?
Athlete, entertainer.
I want to be an athlete or entertainer.
Right.
So that's happening. And I'm like, damn, I keep running my head against the wall. Our culture and our community, we really look up to athletes and entertainers, not investment bankers and entrepreneurs. And at the same time, Beats by Dre started happening. 50 Cents and Vitamin Water started happening. Jessica Alba Honest companies. So now athletes are finally seeing what it's like to be equity owners instead of just brand ambassadors, right? So the attention that I started getting as a private equity and venture capital guy from athletes just started increasing. It was the same thing I was saying forever, but in the bling bling era, when folks were just buying chains and rims that spin, like they weren't really thinking about being an owner. Our culture was very heavily centered around being a consumer. So now that ownership started to become a thing, all of the athletes are like, hey, like, how do I invest in this company? I want to go on a tour of Silicon Valley with you next time you go. And now the leagues are starting to sponsor tech tours in Silicon Valley, and I'm bringing a bunch of athletes to these tours. And I'll never forget, I'm sitting in a room and all of these athletes are on the tour in Silicon Valley with me, Kleiner Perkins and Dreesen Horowitz and all of this. And I'll never forget, we were meeting with Jawbone. You remember Jawbone? A company called Jawbone?
No.
So Jawbone was Beats by Dre before Beats. They made all of the
Oh yeah, I
headphones.
know some. Yeah, yeah.
They were great, dude. Way better product. Beats
Yeah.
just outcompeted them on the marketing side, and Apple acquired them, and then Jawbone got kicked out of the Apple stores because Apple owned Beats. But anyway, we're on this tour, and every single company and every VC at the end of the presentation would say to the athletes, hey man, would love to do something with you guys. Let's figure out something to do together. And you know how y'all too cool. Y'all too cool. Y'all like, yeah, let's take a picture. And I'm like, they want to invest with you. And every time they would let these athletes invest in the deals. So afterwards, I would go to them and say, guys, you can invest with Kleiner Perkins. You can invest with Andreessen Horowitz. You can put money into these deals. Don't just look for the free equity and the brand deals. So the light bulb went off. Here I am teaching kids how to be private equity and venture capitalists when kids want to be athletes and entertainers, when I should teach athletes and entertainers how to be venture capitalists. Because once the kids see you, Malcolm Jenkins, doing it, then they all want to do it. Now look at today. There's so many young kids in urban environments that want to be founders and VCs in college and high school. It is unbelievable. And I'm thanking you guys for that. I'm thanking Nas when we did Queensbridge Venture Partners. I'm thanking Jay-Z. I'm thanking all of the guys that made it cool in our community to become owners and investors. Now our community wants to be entrepreneurs and investors. So I feel like me pivoting and kind of highlighting and promoting my involvement with the athlete and entertainer community has helped filter down all the way down to the kids in our community. And that's why I really spent so much time. So that was the first catalyst. And then, of course, I started getting the text messages from my rich white clients. Hey, man, 80% of these guys are going broke. You know, why don't you do something to help them? And I'm like, I've been helping them for 20 years.
Right.
I've been literally mentoring, vetting deals and educating and letting them invest with me. And I'll never forget. And I told you the story before. I'll tell you again. Looked me right in my eye and said, 80% of white dudes are going broke. We would do more. And I was like, what can I do that's more? And that's when I went from just Kim Institute, which is a nonprofit, to Antimatter Business Partners. Because I would have a conversation like this with you, and then I wouldn't talk to you for another year.
Right.
I would go off and do 100 investments. And I left you in the past. I helped you with your own strategy and awaken you to this whole private equity world. But I wasn't in the trenches with you. And I looked at the model that you guys were implementing when you do these sports clinics back in your communities you come from. You'll come and you'll give these kids 20 years worth of expertise that you've been able to learn, that you paid for, that you worked hard for. And you would give it to these kids in high school who can now take that information and run with it. But guess what? If they don't have the right trainers and the right nutritionists and the right coaches, they won't be able to implement the knowledge that you just gave them in that 2-hour sports clinic.
Right.
So Antimatter Business Partners is my way to stay with them throughout the journey, to help them actually create their own family office, to help. They can text me and my team, my family office, 24/7, 12 months a year to ask any questions that they didn't get to ask in that first 2-hour conversation. And that's my version of doing more. And I really, really enjoy helping, one, my own community. Been helping billionaires make more billions for a long time. But helping my own community has always been a goal. Helping people who are heroes in our community. Not just anybody. We're talking about the heroes who made it. The people we were championing, wearing their jerseys on our back, right?
Right.
And I'm a problem solver. So to look at that 80% of guys going broke when 100% of them have financial advisors, like for me as a finance guy, I'm drawn to that problem, right? Trying to solve that issue. So that's how I started working with athletes.
No, I love that, and honestly, you were the first person who I heard say that out loud, and it shattered my understanding of like the relationship of athletes in that ecosystem. It just really, really, when you talking about just black folks or just anybody with new money who doesn't come from the infrastructure of it, you realize that the relationship of everyone around you becomes of like what they can get off you, even if it's, innocent. They're most of the time incentivized off of your ignorance. Like the more that you don't know, the more you got to pay other people to do things, the more you get ripped off. And so I think like for me, and one of the things I ask you, I know it's been really good, especially with Antimatter, just with the transition out of sports to creating what feels like my own family office where things are organized and I can move, with intention. What have been some of the biggest or most common mistakes that you've seen with guys, even long before they even retire? Because I think once we retire, everything's hitting the fan. We're trying to figure it out. But I feel like there are most of the time we can track back to probably some mistakes that we should have did earlier in our career that could have, set some of those things up, whether it be staff or it's just small little plays or how you should be arranging your business. What are some of those common mistakes?
Man, you got financial, you got mental, you got physical, you got emotional.
Yeah, it's all
Let's
in
start
there.
with financial. If I could convince professional athletes to bring the same mentality that they had in sports to their finances, all of these guys' net worth would double or triple 10, 20 years after they retire. It's just a math equation. And what I mean by that is you guys are experts at professional sports. And you've worked under systems that are some of the most well-oiled machines in the world when it comes to monetization of these professional sports. And you've gotten paid very well for it. The first thing I want every athlete to do before they retire is to promote themselves to become general manager of their own finances. That's just the first thing you have to do. You gotta become the GM of your own finances. And the reason that is extremely important is because you cannot outsource generational wealth to someone who makes $50,000 to $75,000 a year. No disrespect, okay? So you have to be the person that's driving that strategy and that owns that strategy. Does that mean you have to be on the field calling the plays? Does that mean you have to be catching the ball and tackling people on the field? It does not. The GM's job is to put the right coaches and the right players in place to win ball games, okay? So the first thing I want, and I just had this conversation with 2 retired NFL players this week, guys who were extremely successful, multiple Pro Bowls in their careers, and I'm telling them the same thing. And I said, the only people qualified to give you advice on what you should invest your money on are people who are investing more money than you, doing more due diligence than you, and who have a track record of making money. Those are the only people you should listen to. Now, the people to help you execute that advice, that's a completely different thing. But I'm talking about receiving strategy and advice, right? You guys already know this as football players. Who do you listen to when it comes to how to be a better safety or a cornerback? Is it some random dude on Twitter who never played football in his life giving you advice after every game? No. It's the coaches and the GMs and the presidents and the position coaches that are trained at the highest level, right? Hall of Famers who played in those positions that you're using off season to train with, right? Those are the people. But when it comes to your finances, who are you listening to? Are these Hall of Fame finance guys? Are these guys that beat out 99.9% of people to earn your business? No, not at all. So once you position yourself as the general manager, you only have two goals. And I want to share this goal with everyone. Wealthy people in this country care about two things. I'm not talking about rich people. Rich people make a lot of money, spend a lot of money. Wealthy people care about creating more passive income than they spend every year. And they care about growing their net worth. Let's say doubling it every 10 or 15 years. Those are your two goals as a general manager of your own finances. How you get there is just a math equation, right? And the last thing I tell guys, and this is very controversial, your spending is not the problem. I told you this. I told every single guy. I said, you guys don't even spend as much as me. I'm 45 years old, and I've never played football in my life. Your spending isn't a problem. You want me to tell you what the problem is? How much you're earning on your assets, that's the problem. And I'll prove it to you. Let me give you a quick math equation. If you have $10 million and you spend $500,000 a year and you're retired, most of these guys are going to get put into bonds, right? Because they're retired, they're 35, they're going to get put into bonds. That's what the system says. Bonds historically average 2%. So the guy would get a 2% return on bonds. His financial advisor, how much do they charge? 1%? So let's say he gets a 1% net fee off of his $10 million per year. That's $100,000. He's spending $500,000. Is this financial advisor going to come to him and say, man, I got to find out a way to get you an extra $400,000? Or is he going to say, man, you got to spend less money. I got to get those expenses down, man. You spending $500, you're not playing anymore. You got to spend $100. Now, what if you got 6% return? Is 6% unreasonable to get for $10 million? That 6% will generate $600,000 a year. And if you just got 6% per year on average for the rest of your life, you never spend your principal and you're living off passive income for the rest of your life. $500,000 is not a lot of money. That's the average amount that the retired athlete who's 35 is spending. Some are spending $1 million, some are spending $250, but like $500K is right down the middle of the plate. If you're living off of 1, 2, or 3%, the only way to make that math work is if you have $50 or $100 million, and very few have that. The average retired athlete has $10 to $20 million. You need to think about what returns do I need on my money to live comfortably and not have someone force 2% returns down your throat. And you can get those returns anywhere. Real estate, private equity. My money market account was giving me 5.5% for the last couple of years, right? The S&P 500 averages 10%. Yeah, sometimes it's up 20, sometimes it's down 8. But on average, it's 10%. This is without a financial advisor. You can get this stuff in the money market account and in the S&P. But if you're going to pay someone, you got to make sure that they're solving your problems and not just giving you this cookie cutter playbook. The best example I can give you is imagine if during the offseason, every NFL guy that you played against trained at LA Fitness with a coach that they paid $20 a session. And they're just doing the regular stuff that regular people do. And then you show up. You train with the best defensive back coach in the league, and you're faster. What do you guys say? You open your hips better, like all of these things, right? You got explosive speed, you're jumping higher. That's what's happening with athletes. All you guys are using the equivalent of an LA Fitness trainer trying to play in the NFL, wondering why your performance isn't peak. And then here comes one or two guys, like a Shaq, right? Like a Jamal Mashburn, right? Like a Vinny the Microwave, a Junior Bridgman, a Magic Johnson. They'll go off and get a specialist. And then next thing you know, they are making more money post-sports than they made being an athlete. And it's because they got a specialist that's helping them.
A lot has changed in the market. And so I'm wondering, what's your strategy in times like this?
So what's interesting about this, and my private banker at JP Morgan called me yesterday and he said, hey, Rashaun, his name's, I'm gonna put him on blast. Greg Crane at JP Morgan Private Bank called me yesterday. And I told Greg, don't call me to talk about investment stuff. You know I'm nice, right? You know I don't take investment advice from financial advice. He called me though, right. And he said, Rashaun, I'm curious your thoughts on these tariffs and with the markets and everything. Like, what are you doing? I said, Greg, if people are reacting to the markets now, that means that they failed the last 3 years. If you weren't prepared for this today,
Yeah.
then you have not only bad advice, but you've been ignoring economic cycles for the last 100 years. Each economic cycle lasts typically 8 years. We were in year 15 of a cycle.
Right.
I started preparing 5 years ago for a market downturn. That's why I started diversifying into sports assets, which are not correlated to the equity markets, which perform well in a downturn, right? And I said, the best example I can give you is a friend of mine played in the NBA. He's a 7-footer. He's like a little older than me now. And his kids are mad tall. They're like 6'11" in high school. And his name is Theo Ratliff. That's the, actually, I think he played in Philly for a little bit. So this is Theo Ratliff. So Theo's sons are massive, bro. And I was looking at Theo. I was like, hey, Theo, I noticed they're shooting threes and they're crossing people over. It looked like they're running point. And I said, why aren't you teaching them how to be a big man? And Theo said to me, because the league has changed and I'm trying to prepare them for when they enter the league, what skill set they need to have. Not what skill set I had in the past, even though we're the same size. So just like athletes are evolving and looking ahead to see, I remember when cornerbacks and linebackers and running backs used to be a different size than they are in the league now.
Yeah.
Right?
Yeah. Yep.
So you see guys that are training 12-year-olds today so that 10 years from now, they will be the best position player in the league of the future. This is what investors do as well. We're not thinking about what am I going to do this week with the markets.
Right.
We remember 2008. We remember the year 2000 and 2001. The problem is when you have people who have only been in the financial space for 10 to 15 years, they don't even remember 2008.
Yeah.
Bro, I was working at Wachovia in 2008. You think I'm going to repeat? I mean, I think George Bush said it best, bro. You remember the quote George Bush said? He said,
Fool me once.
Fool me once. Shame on you. If you fool me, you can't get fooled again. So look, in 2008, when I lost all that bread and I didn't think I was concentrated, I was working at Wachovia. I owned a bunch of real estate. I had Wachovia stock. And I'm like, real estate? That's the safest thing in the world. Wachovia is the 4th largest bank in the country. Man, I got demolished in 2008. So I remember that. So of course, when this market, which was already wound up really tight, bro, already artificially inflated with stimulus checks after COVID and all of this stuff, I knew that I had to reposition my portfolio for an economic downturn. You see QQQ hitting 54% returns, S&P 24% returns. Bro, this feels like the late 90s to me, right? So it's not going to last forever. So I don't try to time the market, and I don't recommend timing the market, but just know when things are feeling a little frothy, right? Yeah. Know when you're at a peak and you start to peel back and you start to get defensive. So I've been prepared for this for a while. And even my last VC fund, I knew that tech valuations were really high. We raised $150 million and we just kind of sat on it and waited for the market to collapse. And we knew we were going to be able to get those same great tech companies at a fraction of the price because distressed sellers were going to hit the marketplace. Companies are still doing well, right? So it's our job as professional investors to look around the corner and to prepare and to not only think about offense and upside, but also play defense, think about downside. So that's what I told Greg Crane yesterday. Yeah. But what I would tell you is your job as a retired person that is managing your money to pass down to your kids in the future is to not spend your principal and try to generate enough passive income and long-term double that net worth every 10 years. Do you care what happens in the stock market every week or two or every 2? I don't even follow the S&P 500. I have no idea what's going on in it. It's volatile. I don't understand it. It's too many factors. I love owning businesses that kick off cash flow. I understand that. Mm-hmm. And I love investing in the S&P over the long haul where my kids can look at the annualized returns. All I want to know is for the whole year, what was my performance? And I know the last 2 years, I got 24% performance. I can get negative 10% for the next 2 years and still be averaging 10% returns. Right. So that's how I think about the stock market. Now, if there's some fundamental things that have changed in society that I need to think about, for example, if I own Blockbuster shares, right? Then I'm going to start thinking about bigger changes. Yeah. Or if I have a bunch of companies that are unprofitable that need financing in order to survive, and I know financing is collapsing, right? I'm going to be conscious of stuff like that. Yeah. But for the most part, I prepare for this, and I'm looking forward to getting through this cycle and with the least amount of pain, because I've been thinking about it for years.
What's the one area that you're most excited about investing in right now?
Pro sports, and specifically the big three: basketball, football, baseball. And the reason is because it's non-correlated to the stock market. Think about how much your net worth fluctuates if 100% of your net worth is in stocks and bonds. Yeah. Now, think about, is the value of the Atlanta Falcons or the Dallas Cowboys fluctuating right now? No, sir.
No.
So let's say half of your net worth was in sports. Easy selling in that personal financial statement, right? Your balance sheet is looking real good. So that's number one. Number two, the revenue and the valuation of the big three is growing faster than the S&P 500. Basketball, high teens, 17, 18% CAGR, compounded annual growth rate. Football, 14, 15. Baseball, 12, 13. S&P is growing at 10, 11%. So it's growing faster. It's not correlated. And here's the thing I love about it the most. The majority of the revenue for basketball and football is annual reoccurring contracts booked out for 10 to 20 years.
Right.
Every NFL team shows up, is profitable before they even sell a ticket.
Yeah.
So I don't even have to worry about chasing down revenue every year. Man, that's worth a lot of money to me, man. Right? Yeah. And that's why they trade at these high revenue multiples like software companies, because software companies have ARR, long-term contracts, right? And very sticky business. Same thing with these media contracts. They're 12-year contracts with tier 1 creditors that are rated A, like Disney, Amazon, Netflix. I'll take that all day long. So sports to me is a very exciting asset class. And don't let the valuations you see in the news fool you. That's not where all of them trade. You're just looking at where majority stakes trade. You can find minority stakes at different prices, as you know.
Yeah. Brother, look, you got game for days. We can talk about this all day. I think one of the things that I love most about you is that you've always opened yourself up as a resource, which, and you said this to me one time and it stuck with me. You said, man, if I charge you for it, you said, because I give you this for free, you don't value it. If I charge you for it, you'll be on my ass. And I thought about that. And I thought about that so much, like, yeah, it because you don't come with a backwards agenda. You're actually trying to help. It actually caught me off guard the very first time you and I interacted. And so, one of the things you do is always
trying to sell you some timeshares.
You gotta have your defenses up.
But that's why I have it at my house. So dudes know I don't need anything from them. I used to have it in my office. But you have it at your house, dudes can see you got bread. You got the same type of wife, girlfriend they got, same type of cars. It disarms. I know how we are. Like we're used to being the richest dude in the room. I get it.
Right. So what I've always tried to do is, one, just let guys, my peers know about what you're doing. But I want you to, kind of let people know too of how to, get in touch with you if they're looking for this advice, because you always lead with education and knowledge first, which I think is the most empowering thing. Before I could put $1 with you, I came to your house and was able to rap and understand where I was putting that dollar and what it meant, to me and my family. So I want you to be able to open that up, to my following guys who might come across this, people who are looking for answers as well.
Yeah. So first, the way that I'll tell you how I work with guys, and then I'll tell you how to reach me and us. So the most important thing, like you just mentioned, is education. I've been doing that for 24 years. Anybody can send me a DM. You can give them my cell phone number if they reach out to you. And I mostly focus on the bottom 98% of guys. The top 2% guys don't really need me, as I told you before, right? Mm-hmm. Sometimes they want to hit me because they want to be a billionaire, but they have access to everything. The bottom 98% usually are the ones that come to me. So education is first. Second is helping them vet bad opportunities out and get into good opportunities. And the way that we operate is we are professional investors. We're putting our own money in stuff, and we introduce people directly to cap table opportunities alongside us. We're not charging any management fees. We're not charging any carry. We're not charging consulting fees. You're not even paying for any of my due diligence that I'm paying. Now, most of the time, if guys come to us and say, "Hey, I only have 25K," and as you know, to get on the cap table, maybe 250, they'll come to me and say, "Can you create an SPV where me and five of my guys can come in?" And then I'll go to a law firm, create an SPV for them, and whatever the fees from the vehicle goes for the setup costs and for the accounting stuff. But last but not least, next to doing deals and blocking bad deals, we do a lot of deals together. I invest in 4 to 5 companies a month, as you know.
Yep.
The main goal is to help guys create their own family offices so you can have your own strategy. I don't like guys investing with me who have no strategy. I know what my strategy is. I know what returns I need. I know how many investments I need to make. And I'm out here looking for those deals. I'm not playing defense, waiting on them to come to me. I'm playing offense, going after the deals. So what's happening is guys are asking me, Rashaun, what are you investing in? But it may or may not fit your strategy. So I spend a lot of time helping guys figure out, how much money do you spend a year? Let's try to replace that with passive income, right? Now, what is your net worth? Let's try to grow that. Let's have these 2 buckets of money, short term and long term. Now, if there's overlap in what we're investing in, great. If there's not, I don't care where you go to get the deals. I just want you to not spend your principal. I want your kids and grandkids to be left with more money when you pass than you have today. So those are the 3 things that we do. 100% of it is free and has been for 24 years. And whether you want education, you want someone to help you vet deals for you, teach you how to vet deals, or create your own family office. My Instagram is Rashaun_Williams. And I reply to everything. I'm on Instagram just like you guys.
Brother, man, you are a gem, man. You keep giving, and obviously it comes back to you. So we appreciate you. Appreciate the time you gave us, the knowledge as always. And y'all go follow Rashaun. You're doing great things, brother. I appreciate
All
you.
right. Good seeing you, man. Thank you
Yeah,
very much.
always.